Alright guys, welcome back to another video here. It's your boy Prince. Today we'll be analyzing the CAD, the US dollar against the Canadian dollar. Well, starting off the monthly time frame, we can identify what we call a key resistance here. As you can see, that price, came down, tested it once, went down again, came up, tested the second time, went up again. Broke it, however, price came down one more time. Obviously, this we can see this is a bearish trend. So price came down, went up to test it to confirm the bullish obviously structure of the market showing a continuation to the downside. So now we should be expecting, the US dollar to go up and test this key resistance before we can see maybe a retracement to the neckline of this bullish structure, or a break from this resistance, and a retest to obviously to see a continuation to the upside to test the highs of this long ass market trade. So that is our, a monthly obviously analysis. Either we see a break of this resistance, turn support to the upside, or we see a what we call a retracement to the neckline of this bullish, cycle before a maybe a continuation to the upside or a continuation to the downside to test the lows of this price action. Now onto the weekly. So weekly we can see, as I said, the weekly is quite similar to the monthly. We can tell that this is a very, very key price point of interest. Many times that price come down to test this, you know, as we can see in the past. So this area of zone, this POI, which is price point of interest, is very, very key. Now, currently, as we can see here, we are seeing what we call a double bottom here. So price came down, went up, failed to continue up. Price went down one more time to change the obviously sellers tried change the direction. However, bullish came in control and pushed the price upwards, forming in what we call a double bottom, which is a very bullish pattern by professional traders. So we are expecting some sort of what we call a retracement to the neckline of this trade, and the best way to identify the neckline without knowing too much is by using the Fibonacci, which shows us where the neckline can be. And looking at, we can see the 61.8 confluence obviously is in accordance with the neckline of the trade, or where we see most touches of the market before a rejection to the downside, is as the first price action that happened for the rejection was there, second one here, third one, fourth one, and obviously we can see before price break it. So we should be expecting a retracement on the weekly time frame to confirm this bullish cycle, as we can see here. So yeah, this is what the weekly time frame is indicating for us, that we should expect a what we call a retracement to the 61.8 before a continuation to touch the monthly resistance zone. Now onto the daily time frame, we can see, that price in a very what we call a very interesting, because as we can see, this is the high to the low part of this cycle here. You see that there's a lot of wicks that needed to be filled in terms of price action wise. So obviously, buyers have been in control since here, going up, down, forming higher lows, higher lows. So what we'd see here is that currently I'm expecting price to because we have a what we call a retracement on the weekly time frame that needs to be filled in order for us to see a continuation. We should be expecting a change in direction around this price areas zone, since the need then all these liquidity need to be filled due to the fact that This mini support here is what has pushed price to the upside since this bearish wicks obviously failed to break past this um, price point, obviously forming a bullish entry. So I'm expecting that the market will go and touch this highs, and maybe we will see a change in price direction to the downside to obviously form and to confirm that bullish cycle on the weekly time frame as we saw. But ultimately, we are expecting price to go and touch this monthly resistance as we saw earlier. So yeah, however, due to the weekly, we are expecting what we call a retracement to come and touch this neckline. So therefore, we're going to be looking for bullish entries around this price range. However, market does change. So therefore, we don't predict the market. We react to what the market is telling us. So by looking at this, I would expect a change in direction in terms of price coming to touch this area of resistance, making what we call some bullish candles, some weak bullish candles, forming some weak bullish candles to indicate that there's a change in direction before we can fully see the bullish uh, continuation of the cycle on the weekly and monthly time frame. So yeah, that is my understanding of the market. So far we are in a bullish cycle. We are in a bullish market for USD, US dollar CAD, due to the fact that obviously we've seen that price formed a bullish continuation pattern here due to the weak bearish candle failing to break past this price level and obviously forming a bullish pattern or forming a bullish continuation candle. So I'm expecting price to continue to the upside to touch the 13 1.3 to 3,300 price range before we can maybe either see a drop to the weekly, what we call the weekly neckline, the weekly resistance, the weekly stop support zone before a change in direction to the upside to confirm and fully complete this bullish cycle that we have on USD CAD. Now, looking onto the COT report, we can see that the US, obviously the US dollar and US index, there has been some adjustments made. For example, for the longest, for the buyers, they added a 2.3K trades on the longs, and obviously it added 1.9K on shorts. So we can see that obviously there is a tug of war between the buyers and the sellers on the US dollar. Now, checking the Canadian dollar, we can also see that it's quite a relatively the same results in terms of this added 5,000 long trades added by non-commercials with 4K plus added short on from non-commercial traders. So this is basically a tug of war between the buyers and sellers for both currencies. So therefore, this can cause a lot of confusion in terms of the market. And obviously, we do have news coming out tomorrow, which is Wednesday. We have GDP for Australian dollar. We have the interest rate statement coming out for the Canadian from the Bank of Canada. All these things are going to cause the market to be in a very high volatile momentum. Obviously, trading period. So this is 3 p.m. tomorrow, which is the UK timing, and we have you know Powell speaking on Thursday. We have a lot of news coming out with the euro. So this actually we're in the last quarter of 2022. So there's a lot of events happening, and this is the first trading week of September. So we should be expecting some high impacting news affecting the market, especially with USD CAD when both parties are going to be experiencing some high, intense trading from um, from the market based on fundamental and technical analysis. So yeah, that is my analysis on USD CAD. Let me know what you think, guys, in the comments. Drop your suggestions and any other currency pair